Our next guest, though, says the market's not out of the woods yet. He expects another possible decline ahead. Let's bring in Jonathan Thomas. He's president and CEO of American Century Investments. Well, it's not Lake Tahoe, but this will do. New York Stock Exchange.
That's
good to have you here.
Yeah, thanks for being.
So we're not out of the woods yet. Explain.
Well, yeah, our advice to our clients has really been to be patient, be prepared, but also be particular. Everybody feels like we've had this big run up in the market and therefore everything's okay. But we're really, as you just said, not out of the woods. You've got a steeply inverted yield curve, the most negative it's been since 1980. I think everybody knows there's a commercial real estate bubble heading our way as well. And then everybody looks at the market and say, well, it's up 17% on the S&P. But if you look back in 87, it was up 100% before the correction. It was up 60% before 2000. And it was up 30% before 08. So it doesn't necessarily lead to, continued success.
I mean, you bring up things like 87 and big market gains leading into that, especially into the fall.
Right.
Here we go, seasonally, what is not a good period for stocks.
Right.
Are you looking for a big pullback? I mean, to what magnitude are you talking about stocks really correcting?
So I don't think anybody's really, if you look at the economists and Wall Street prognosticators, it's kind of split 50-50, and even the people we're calling for the harshest corrections have walked that back to either no recession or a soft landing or a mild recession. And I think that aligns with where we are, too. We're talking about a slight pullback, nothing catastrophic like 87, 2000, or 08. No.
Yeah. In terms of the competition between fixed income and equities, where do you skew on that, just given the rally that we've had and now we see rates ticking up again? How do you assess that?
So, American Century, we're long-term investors. We're not traders per se. So the advice we give people right now, cash is really attractive. I've always wondered, really since 2010, what are we going to do when cash is yielding 5% or more? Will people even go back into the markets given the volatility they just experienced? And what we see a lot of people doing is there's a lot of people moving into cash and cash-like instruments, gathering that 5%, and then systematically moving in, and then being prepared to act if the market does correct. Because the reality of it is, even though the S&P is up 17%, as you know, Scott, it's super narrow. There's 7 or 8 stocks that are driving all of that. So you got to be pretty particular when you do go back in.
I feel like the point you're making, though, is there's still formidable competition for stocks, whether it's cash, absolutely, where you're getting 5% or whatever you're getting, and then through fixed income, where the risk reward may be better than you see it in equities.
Absolutely, totally.
Yeah. Can you comment too on I don't think enough people know about the commitment that your firm makes to health and well-being, the amount of your profits that sort of go back to society. Can you talk about that?
Yeah, it is incredible. I call us a universe of one. They're the only people in the world that do this. Our founder, a guy named Jim Stowers, did something that almost nobody does when they're alive. He gave away the entirety of his fortune to set up a medical research organization to find cures for cancer and other gene-based diseases. As part of what he gave away 40% of the ownership of American Century. The Stowers Institute for Medical Research holds that, and each and every year, as a result of people doing business with us, we direct over 40% of our profits to medical research. To put that in perspective, over the last 20 years, it's $1.9 billion that we have sent to medical research, and it inspires our employees and inspires our clients as well to continue to do business with us.
The tournament in which we broadcast live from this year was spectacular. Obviously, Steph Curry made the hole-in-one was in and of itself amazing.
Yeah.
Goes on to win the event. And that event in and of itself has raised some $7 million for local charities, too.
It has. I mean, the whole thing was created by John Miller, the genius of John Miller from NBC 34 years ago. But yes, through that tournament, we've raised $7 million for basically local and national charities. It's a philanthropic component of the tournament, and the celebrities, who I hope you spent some time with, a few of them, they're actually very inspired by it as well. It keeps them coming back, and it's why we have such an impressive field of athletes out there each year.
Yeah, we were obviously excited, and we brought the news the day that we broadcast there about the new partnership between NBC Sports and you guys. We're going to do this for a long time.
Yes, so this, right now, it is already the longest-running made-for-TV sports event in the country. At 34 years, we've been the sponsor for 25. and we've just added another 6 years to it. So we will be crushing all sorts of records, and we'll keep this thing going for another 6 years.
I'm going to start planning my travel now.
Please do. We love having you out there.
That good of an event. Let's get back to the market before I let you go. What gets you more optimistic? Is it that you know that the Fed is done? Do you think they're done? How do you view that now?
So, I think the Fed's going to start slowing up. One of the things that everybody talks about what's going on in the economy in a one-dimensional way. But the truth of it is it's very multidimensional. And since we're in football season, I'll use a football term, we flooded the zone with economic issues, right? We had the federal government throwing gas on the fire. We had the Federal Reserve trying to hose it down. We had Russia attacking Ukraine, and we still had the supply imbalances from COVID. All of that, the M2, the money supply is starting to correct. The supply imbalances are coming back in line, and I think that is going to result in a mild recession or soft landing. So I'm pretty optimistic about the future, though I do still think a pullback is a real risk.